Alrighty, let's get started here. So this is our delineating point. We're a few minutes behind, but that's okay. I have planned this session to go all the way to 7:30, so an hour and a half. We have plenty of time. Let's first just discuss the Open 5A and the parameters of it, and then by that point we should be right around the Open 5, and we'll watch and we'll talk more. Okay, so again, I don't post stuff for my health. I post it for your health. So if you have not done the following, do it right now, okay? I posted this in announcements right here, okay? Notes for today, write this down, okay? So you should have that written down so you can follow along. That is the agenda and the syllabus for today. So first of all, and not everything's on it, obviously. I'm gonna fill it in, but I'm not gonna make PowerPoints for sessions like this. Waste of time. So number one, the Open 5. And I'm going to say the Open 5, it has two parts, a part A and a part B we'll get to in a minute. But collectively, we call it the Open 5. Today is mostly about the Open 5A because the Open 5B is a whole different idea, but I will address what the B is. Having said that, the Open 5A is the simplest setup that I have. There is absolutely no question about that. That doesn't mean it's the easiest to learn. It means it's the simplest. It has the fewest considerations that you have to understand to execute it. However, this is the conundrum. It is the one that requires the most practice of any setup that I have. So it is the simplest, and yet it requires the most practice. And no, that is not a contrary bit of information. That is exactly how it typically works in the trading world. The simplest stuff is simply about practice. This is one of those. If you overthink this trade, it won't work. In fact, if you think at all when you're doing this trade, it won't work. You don't need to think to do this trade. All you have to do is follow the market. It's that simple. Okay, so a couple of other things about this. It's the simplest. It requires the most process. And again, you should be writing these notes down. It is over 5 minutes into the Open. That's the end of the Open 5A. Critical that you guys learn that. Some of you from the workshop last year still don't get that point. The Open 5A is the first 5 minutes, and that is it. End of conversation, end of story. Everything after that is structural about the first hour, and it's about the Open 5B. So this first trade, the Open 5A, is over, done with as soon as the market gets to 5 minutes in, and I will explain why. Okay, so simplest, requires the most practice, over in 5 minutes. I have 1, 2, 3, somewhere between 4 and 6, depending on who you count specifically, but certainly 4 people that I know well, that I have coached or mentored for a long time, and this is all they do. The surfer guy is one of them. The video game guy does this, but he does other stuff too. I have a woman that I coached years ago in Chicago who trades the overnight. She's an RTY overnight trader who makes money every night doing that. I don't know how, but she's really good at that. And she was looking for something to wrap up in the morning, and then she goes and does whatever she wants during the day, and started trading the Open 5A about 18 months ago. And I got an email about 3 months ago with some results that are just phenomenal. Again, so that is all she does during RTH. So I'm telling you all that because it's a really good introduction to how cool this play is. And so let's talk about why it happens. And this is the most important part. If you understand this, the rest of how to play this setup gets pretty simple. Or straightforward is probably a better word. Okay, this occurs, the Open 5 occurs because overnight, any overnight, doesn't matter what the instrument is, but just for fun, take the ES, okay? Whenever the ES is trading overnight, and here's an example of what it looks like from this overnight. Here's yesterday over here. Let's turn on the stupid spotlight. Hang on a second. Oh, this is the latest annoyance. So the Zoom's toolbar splits into 2 pieces, and one of the pieces just randomly moves around. Okay, that's the one. All right, we have the spotlight now. So what happens overnight is that there is trading, as we know, and right now it's fairly low volume, 300,000. That's not really low. That's not high. It's normal low for this time of the year. So anybody that has a large portfolio or has a portfolio with any sort of restrictions, like a lot of funds do, what I mean by that is most funds are not allowed to trade overnight. Their charter specifies what they can do when, and because of the risk, they are prohibited from doing that. The traders for the fund cannot trade overnight, but that doesn't mean they can't trade right at the open. So what this setup is all about is that right there. Overnight is a low volume, non-institutional event. Yes, there are institutional traders that play, but not with massive amounts of money, because again, who would give a hedge fund $50 billion and say, hey, go ahead and trade it overnight, you guys? Nobody in their right mind, okay? Now, if I gave that hedge fund $50 billion and I said, you can trade overnight, but you can't trade overnight with more than $1 million. Again, this is not uncommon, what I'm saying. But as soon as the regular session opens, you can trade with your entire equity. That is exactly what creates this setup. I've been watching this setup since the mid-1990s. I used to trade this on the big contract, the SP. There was a time when I leased a seat, and that's what I did. I called it the 2 and 2 in those days. 2 points in 2 minutes was what I used to go for, using technical analysis, obviously, because we had no order flow. So that's the premise, and I'm going to pause here. Does everybody understand why the open 5 occurs? If you don't, you're going to be lost the rest of the session. It occurs because large traders cannot put on large positions at night, either because their charters prohibit them from doing that, or because they're not insane putting on 1,000 lot when the liquidity is as low as it is overnight. You're going to move the price too much. Now, every now and then that does happen because somebody has to do a trade for some reason, but it's really uncommon, okay? And when it does happen, you see it, obviously. It'll sweep out a whole lot of levels. Okay, so anybody that's not clear on that, if you have a question on that, you need to ask it right now, because if you ask it later, I'm going to beat you up. You have to get that into your head. That is how it works. That is why it works. And now we're going to talk about how to trade it. But the Open 5A, very simply, is a reckoning of large traders on what happened overnight and what they have to do with their portfolios based on overnight orders they may have gotten, or based on position adjustments that they are doing if they manage their own trades. And they are all looking to do that quickly if they need to do it based on some event. Let's say there was a really bad news event and the market's crashing and you're not allowed to trade overnight. The second it opens, what are you going to do? You're going to liquidate, of course. So that's why you see, just amazing follow through of big overnight moves right at the open, but it doesn't last. And that's the key. Why doesn't it last? Why is it a 5-minute trade? Very simple. Again, because anybody that had to do that at the open's going to do it right away. They're not going to wait. It's not a matter. The problem they have is yesterday's close versus what happened overnight. That's their problem. The only place they're going to fix that is right at the opening of RTH, when the liquidity just shoots up and the volume shoots up. If they're a structural trader, that is not what they're going to do. They're going to wait and see what the first hour looks like and yada, yada, yada. That's not who we're talking about. We're talking about somebody that has a problem based on what happened overnight, or they see an opportunity based on what happened overnight. They are going to take advantage of that right at the open because that's the time they can do that, okay? That has to be crystal clear. If it's not, you're lost. Okay, so what is the setup? Once we understand that, the Open 5A is ridiculously simple, okay? Not easy to execute, but very simple. Look where there is high volume. That's the first thing you have to do. We have a high volume node up here and we're leaving it. This is potentially a flip setup also, but we won't talk about that till we talk about flips. Okay, what does the rest of this tell you? Well, this is an orderly high volume node. This is another one kind of collectively here, little gap in there. This entire thing is symmetrical though. If you add yesterday to it, take this volume profile mentally and just glue it in here. And what do you get? Or just run yourself a 24-hour profile, including yesterday's session. And you'll see you have a nice, beautiful, symmetrical volume profile. So but that's yesterday. This is not yesterday. So right now you have to look at this and say, okay, you know, if somebody had a problem based on what happened overnight, what are they going to do right at the open? And you don't want to predict it. You don't need to predict it. You just want to learn to go with it and where there might be some high volume nodes. And we've got one, call this one 3394, you know, 0 to 5 is this one. That one's really important because that's the low over here too. I wouldn't put too much weight on this other than it's the big fat whole number at 3,400. My interest is this ledge up here and the edge we're at right now, which was the top of the open yesterday. If the market truly is going to continue rallying, it should get bought right here. Okay, so that's the high volume nodes. That's all you need to understand. I know I did that fast, but we'll do it many, many more times, and I'll show some more examples after this open. By the way, you can see it also on my DOM volume profiles. It's just not quite as easy to see because, you know, it's over a longer period because these are literally tick by tick. Okay, so that's what you look for. And again, you do this before the open. So you look at the overnight and you say, all right, are there any significant places to pay attention to? Yes, there are. 90 to 95-ish. Big fat whole number at 3,400, and then the edge and the ledge we're right at right now, okay? So that's that. Now, you have that in your brain, and then you say, okay, what else do I need to know? All right, what's the volume? Is the volume low or high? If it's low, it's a potential flip, and that's just a little bias you can put in the back of your mind. It is not that low, but it could be a flip. If it is, it already started right now, okay? We did the high volume nodes. The only other thing you want to watch is this. Sorry to keep dragging this in and out. What's the percentage change and are we correlated? And right now we have a very low positive change and we're well correlated with RTY leading, which is what you'd expect if the market is going to continue up because the small caps, higher risk, they should lead. If they don't, that's a bad sign. All right, let's pause right here because this is all you need to know to do this setup. Does anybody have any questions on any of that? We have about 10 minutes before it opens, and I'm going to explain how to execute it next. After we get today's Open 5, we're going to go look at examples like from yesterday and a couple of days ago, so you can see in hindsight what it looked like. Today, we will play it real time. We will trade it if it looks like it's a good one. I'll trade it live with the MES, maybe the ES. And maybe NQ I generally don't use as much, but we'll see. That's actually a good point to mention. You know, is there a specific instrument that's good for the Open 5? Yes, the ES is the best one because it does the Open 5 the most predictably. NQ can be okay for it if you're nimble. Trouble with NQ at the Open 5 is the head fakes can be dramatic. And I'm going to talk about head fakes in just a second because that's a consideration of this trade. Okay, any questions at this point? Could I repeat the correlation part? Who leads? Small caps should always lead in a rallying market. If they're not, something's fucked up, Jonathan. It's that simple. So if the RTY and the NQ are not leading, we can't rally because that's the risk on stuff. And if people are buying that, we'll rally. If that stuff's getting sold, it's risk off and we won't rally. It's literally that simple. Okay. Can I, okay, we did that. Can I go over the percent change again? I'm not sure what your question is. What do I think about RT? No, not at this stage, David. Not for the Open 5. To surmise, watch out for, yes. CK, correct. Can I explain risk on, risk off? That's an internals question, and the internal session October 9th, David. A very simple short answer is, in general, the market is either in risk on or risk off mode. Okay, that's an in general bias you should have. And risk on is when people are buying dips and people are putting money to work. They are taking risk by being in the market. Risk off is when they are liquidating and getting out of the market to protect themselves or take profit. Can you tell that by reading the overnight session? Yes, you can, but I'm not going to explain how in this session here because it's about other stuff. It's about the VIX. It's about the internals. It has nothing to do with the Open 5A trade. So again, you guys are getting into detail that doesn't matter. Okay. The only thing that matters in the Open 5A trade is the following. Okay, you guys are trying to tell me how to execute it, and I haven't told you yet what the execution is. I told you the parameters. Okay, this is a classic example of everybody thinking too much, and I said at the very beginning, that's the only mistake you can make in this setup, is to overthink. Here's what you need to know. What's the percentage change overnight? Is it big or small? And what's the volume? Okay, today I already explained. It's in the middle, and we have correlation, as we should if we're going to continue with an upbound bias. End of conversation. What are the high volume nodes? I already showed you. That's it. That's all you need to know. You're done. You're ready for Open 5. It's in 7 minutes. So we got to talk about how you execute it. Number one, there is frequently a head fake on this trade. What's a head fake? Okay, this trade starts the second we go to RTH. I watch 15-second bars. Do not try to do this with a footprint, guys. It's much easier to do bar by bar and bar by bar delta. You can do it with a footprint, but you're going to get confused because you're trying to read liquidity and structure, and you don't need that to do this trade. So make it simple, use an old-fashioned chart, and just watch the price action and the delta. Nothing else matters. Write that down, bold, highlight it, circle it in red, and stop asking me questions about whether the correlation or the VIX will make it better or worse. Understand that point. Okay, is everybody clear? High volume nodes, watch out for the head fake. That's all you got to think about. Now, what does it look like? Okay, the head fake is simply, think about the psychology here, guys. Everybody, you know, newbies constantly want to get metrics and numbers and analysis out of the market. And the market is human beings trading. Algorithms are just taking advantage of human beings' fear and greed, but they're doing basically the same idea. Don't overthink this, okay? So what's happening? Why might there be a head fake? Okay. I'm Jeff, and I'm sitting on 1,000 lot. I want to trade at the open one way or the other based on what happened overnight or high volume nodes or a position I'm putting on or taking off, whatever. I've got 1,000 lot ready to go. Am I going to do it at 630.01? No, of course not. I'm going to give it a beat or two. And the reason I'm going to do that is I want to get a sense, just for a couple of seconds, of what everyone else is doing. Because if I'm dropping my 1,000 lot and 3 other guys drop their 1,000 lots, we're all going to sweep the stops and get screwed on our fills. So everybody's trying to outthink the other guy, and that's the beauty of the trade. You can be the guy watching everybody else in musical chairs, and you can just be the fly on the wall. That's the trick to this trade. Be the fly on the wall. Expect a head fake, but you may not get it. But if you expect it, it will protect you from getting on the wrong side of this trade right away, because that's the only mistake I've made in this trade, is I get on the wrong side of it too fast. And if that happens to you, get flat and start over as fast as you can. Don't try to fix it, because the Open 5 moves too fast. But if you give it that beat, and what's a beat? What is waiting a second for the head fake? That's the beauty of the 15-second charts. They give you 4 snapshots a minute. So I want to see somewhere between the first 2 and 4 snapshots. That's where there's going to be a head fake typically. So the first minute. So, yeah, and again, these aren't rigid rules. It's just a guideline. Sometimes you'll see a head fake, 3 minutes in. But it's usually predictable if you watch the 15-minute bar by bar equivolume and watch out for the deltas. Do not write this down, bold. Do not concern yourself with LRCs or Goldilocks corners or any of that crap. Test question, why not? Why is that not relevant at the Open 5? Anybody, put it in the chat right now. Oh, 15-second. Yes, if I said minute, I apologize. 15 seconds, they're right in front of you, they're right here, okay? It's about the order flow. You're on the right track. Why are the LRCs not accurate right at the open? It's a loaded question, guys. We just opened, so how can you statistically game 80 bars and 20 bars back? You don't have them, okay? It's that simple. Yes, exactly, David, Colin nailed it. What happened before RTH starting is meaningless. So the range doesn't mean anything for the first minute or two, because you got to get 80 bars. Otherwise, you don't have a valid range measurement, right? Exactly, Martin. They include the pre-market. So you want to look just from the open. Disregard the ranges completely for this trade and just watch the price action. That's it. Okay, so execution rules. Look for a head fake. Market orders in. Absolutely no exceptions to that. You do not try to limit into this trade. You will get screwed. Every time you try to do that, the market will tap your price and you will not get filled. Trust me. So take market orders for the entire size you're going to trade, whether it's 1 or 100, do it all at once. This is not a scale in, scale out. It's an all at once trade that you do with a market order in. You can limit out of it or market out of it depending on what instrument you're trading and what's happening, but do not try to limit into this. You will get screwed, trust me. There's just no exception to that. I've tried it for 20 years. It doesn't work. Don't argue with me. Okay, let's see. Second thing about execution. The second the trade is on, you have to get a stop between you and your entry. In other words, you should be profitable, so you need to lock that profit in. If you can't do that, get flat. You have to do that. Otherwise, this trade can run away from you so fast, you could be upside down $1,000 in the NASDAQ instantly. Trading NQ with a one lot, okay? That's what happens in this trade. If the market's gonna move really big, it will do it right at this point, or it will wait till later, okay? That's why this is such a good trade. So immediately get a stop in, lock your profit. If you don't have profit, get out. This is all about execution. And that's pretty much it. Okay, so real quick review. Simplest trade I've got. Must practice it. It's over in 5 minutes. You understand why it occurs. The setup. Watch the overnight percentages and volume just to get an idea how volatile it might be. Look for high volume nodes to lean on. That's what you're going to do with them. If we drop at the open 5 into that 3,400 number, that might be an opportunity to buy. If we drop to that 90 to 95 number, it's a better opportunity to buy because that's the low of yesterday. So that's kind of a bias you can build in as you watch the price action, okay? But that's the only considerations. High volume nodes, and is this a volatile high volume overnight or not? Period, end of conversation. When you do the trade, watch for a head fake. There often is one, and by head fake, I just mean it goes one way for brief 2 bars, 1 bar, 4 bars, and then it just radically goes the other way. That's what the head fake looks like. Don't go with the head fake. If you're in it, get flat and get on the other train. Now, this trade, in order for it to work, there has to be momentum one way or the other. Obviously, if we open and nothing's happening, there's no open 5 trade. Okay, any questions? You guys keep asking me about the goddamn volume. Forget the volume, okay? That's a tiny, 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 tiny consideration. This is about market action. It is not about the volume. That is more of a consideration for other setups later and for the B. Okay, let's see. Yep, all good. Okay. Not necessarily, Jonathan. That's later. Again, you don't know anything about the intentions of big traders before the open based on what happened overnight. All we know is that if they are going to play, we know where they might play. Is that clear? We cannot predict this trade in any way, shape, or form. Stop trying to do that. Focus on what might influence it and then how to play it. Okay, we are at 6:31 right now. Look at the 15 seconds. Do we have a bias? It's down. Is it getting sold still? No. So we potentially have a head fake. Look where we are. We're at 2. Remember, the first node is right here at 0, just below us. So if buyers come in here, it would not surprise me and I would get long, but they're not doing that yet. I wouldn't sell it. I wouldn't buy it. So far in this open 5, there's no trade. Okay. Watch this. Watch the bar by bar of the ES. Forget everything else for now. The NQ will be much more volatile. We'll talk about it later. Watch the ES. This trade's about the ES. You can trade the NQ with it, but the barometer is the ES. Okay, see, NASDAQ's trying to rally. Can it pull up? Yes, it did. Okay, remember what I just said. There's that corner. It was just above the high volume node at 3,400. Would I get long here? No, because there's no energy. It's not going. This isn't a whole bunch of people that had to buy overnight that can't buy. This is everybody trying to figure out what everybody else is doing. So key point about this trade, if it's not overwhelmingly in one direction or the other, don't take it. The NASDAQ is trying to make this along right now, and so far it has not succeeded in pulling the other guys up with it. Okay, ignore my oil and gold over here on the far left. They're irrelevant for this situation. Okay, now, while that is happening, let's just watch this and see if a trade develops. I'm guessing right now we're not going to have a very good open 5. We're 3 minutes left. I don't think anybody has an order on their book they've got to fill right now. I think everybody's just watching everybody else. That's my take. And so when you see this, when the open 5 is not overwhelmingly in one direction or the other, sit on your hands and watch the high volume nodes. Watch 3,400. Watch 95 and 90 to 95. That's a big giant one down there, and that's the low from yesterday. Remember that. So, you know, what's going on here? This is a potential long, but that's it. It's not a good setup for a long. There's no buying energy here at all. The NASDAQ is now getting sold. See how they talk to you about, the NASDAQ was telling me, saying, Jeff, you know, I'm going to try to pull the rest of the indexes up, but it's not working real well. So, you know, you don't want to be long. The NASDAQ can guide you if you listen to it. See, again, here it goes again. They are trying to rally this market. If the RTY and the NASDAQ can do that, it will pull the ES up. But so far, that ain't happening. You know, just watch the bottom. Watch these charts on the bottom. You know, they are trying to make it happen here. The NASDAQ, you know, which is where all the action's been, you know, for a bunch of weeks. So, okay, it's starting to get some traction. Let's see what happens. Nope. And then they're selling it again. So this open 5A is a non-trade. That simple. You could be scalping NQ right now for price action and doing really well. This is a great NQ scalp, but it has nothing to do with the open 5. It's just pure order flow scalping. Anyway, okay, cool. So that is our first look at the open 5A. This one sucked. It could be a long, by the way. If this is anything, it's a long. This isn't a short, unless we just blow through 3,400 and then take out 95 on the way down. This is not even close to a short. So don't think that way. This is a trade to sit on and let it develop. The first hour high and low here will be much more informative. So let's go to let's go away from trying to trade this and go out to some theory, which will be much more useful given what we're seeing. We'll keep an eye on it. If something happens, I'll jump back into live. So let's look at process and playbook. One thing about this is too small, and I have to kind of drag it wider, and that kind of defeats the purpose. So let's see what we could do here. This is just a teaching problem. For me, it works fine, but when class is going, it's harder. All right, let's see if we can just watch those guys. Yeah, that probably works. All right, so here we can watch the NQ and the ES and see the NQ is still trying to pull up the rest of the market unsuccessfully. And while that's going on, let's just blow this up and talk to it. Okay, so this is, oh, I don't want that. Sorry, that was from a coaching session yesterday. Okay, this is the one we're talking about. So let's focus on this. Whoops, wrong one. Okay, that's what we want. All right, so what kind of price action do you look for here? You look for high momentum, and there's often price discovery around this trade. We're seeing that right now, which means there's no setup here. It's a scalp trade. You have to play this like a scalp. I already covered that. Market orders in, get out with, I use limits sometimes, but sometimes I'll just hit flat if I'm profitable, or I'll trail that stop up underneath it and it'll get taken out profitably. Do not take this trade if it's not clearly one-sided. Is this setup right now clearly one-sided? Is there one side of the market dominant right now? Anybody can answer that. No, we're doing nothing in a tight little range. So there is no open 5. It's that simple. Go surfing. There may be an open 5B. We'll talk about that in a minute. What else do you need to know? Is there overwhelming momentum one way? The 10 to 15 second bars are the way to see this. Over and over again, I've said, don't try to watch this on the DOM unless you're good at the DOM. If you've made it to DOM from the chart, then you can do that. That's what I do. But I still use the 15-second bars because they're just so graphical. Look at that. It's just, I don't need to see anything else but that right now. Now we're testing the lows, and I wouldn't be surprised if we get down to 3,400 really quickly. And then probably test 95, 97.5 anyway. All right, there's even. So now we're selling down a little bit, but this is not the open 5 anymore. Everybody sees what's going on. This is going into the first hour, and this is an opening drive, potentially short. That's what you're seeing now. The open 5 trade is over. There was none. And now you have a potential structural short if it holds and continues down. Otherwise, it's a great long from an ebb and flow point of view. But let's go back to this. Rules: never fade this trade, ever. You are not right. You can't possibly see anything that tells you that you should be fading. By fading, what I mean here is, oh, you know, it's going down, I'm going to get long, or it's going up, I'm going to short. You go with this trade. If you are fading, if you are on the opposite side of price action in this trade, you're doing it wrong. That simple. Market orders in, take profits. Okay, let's look at some other examples of this guy. Yesterday was actually a really good example. And so give me a second here to put my scroll bars back on. And okay, and let's go back and look at yesterday. Oh, hang on. Sorry guys, this is a little hard to do with WQHD. There we go. Okay. So what you know what? I've got the wrong one for this, but let's just do, I always have to break all of my setups to teach. Okay. So what we're going to do here is, this fell off. All right. We're going to switch this to 15 seconds from a minute so you can actually see what happened. And of course it shot back up to today. So let's go back to yesterday. Give me just a second here to get organized, guys. It's not cooperating. Okay. Yeah, that's not the example I wanted to show you either. Here we go. It's back here. Okay, that's the one. All right, let's have a look at this. So here's a really good example of what a typical open 5 trade will look like. Remember, these are 15-second bars. This is a couple of days ago. See how this buying right here, we open right here. And you see that buying right where I have my pointer right there. There's a blue bar. It's a 15-second bar. It's blue for buying, and it's thick because there was volume. So right there, that was a really classic example of just that we opened and the buyers just came piling in. So you had a great long, and if you were, if you were executing properly and you had your stop between your entry and that trade, you exited here, and then it pulled back and it gave you an open 5B trade later, which I'll talk more about. But that's a very typical example of what this looks like. I'm going to go get a different chart because this one's not going to work right for this. So hang on a second. Just give me a moment. Let's see. Let's put that back to this. And if you have questions, go ahead and post them. I'm going to stop for questions in just a second. Okay. Let's use this guy. All right. So here's what happened today. And you can, so we open here and, okay, no trade. There's just literally nothing happened there. But let me go get a bunch more days and we'll just scroll back and look at a few days. So what do we got? 3 here. Let's get 5. That should do it. Okay, give that a second. I'll look at the questions. Absolutely, Jonathan. Jonathan says it's a priceless example day because the hardest thing for him to do is recognize when there's no trade. That's the hardest thing for everybody to do with this trade. You have 3 options with this trade: long, short, or nothing. Your default is always nothing, flat. You never have a bias to take a trade. Your bias should be to not take the trade. So you should just assume you're not going to take it unless you see an opportunity. That's the way to handle that, Jonathan. Okay. Yeah, Amy, this is a great point. The second there's no setup, you say, no setup, and you go do something else. Don't sit there trying to create a setup. So the question is, how do I define the difference between fading and a head fake? Well, I don't trade the head fake. That's the answer, Amy. In other words, if the market is going up, I will never take a short. And if it's going down, I will never take a long in this setup. However, if there's a head fake, let's say I thought I saw a really big high volume event. Like let's say I saw this bar right here and I thought, oh, they're buying and I got long. I might have actually made a little money doing that, but the second that it reversed, I would have just flattened it out, whether I was profitable or not, because I was said, no, that's not working. When the Open 5A works, as you know, when you've seen it, it's really dramatic. And let's look at some examples of that, because there's tons of them. Just grab a 15-second chart and go look at any batch of days, and you'll see a whole bunch of examples. So let's just randomly scroll back. I'm not even going to know what day I'm on. I'm just going to randomly find an open and look at it. This is a great way to practice your understanding of this trade. I'll answer the rest of the questions in a second. I'm seeing stuff out of my bad peripheral vision right eye, which I have no peripheral vision in either of my eyes because of my stroke. And so I learned to accommodate that by which way I turn my head. Okay, so this Open 5, whatever day this was, let's do that and look at that right there. Okay, so on that day, forget this purple line moving, that's current price. If you saw this, you probably would say long. Look at that delta, and this was right on the open, 30 seconds in, 15-second bars, right? I would have bought that, okay? So I'm long here. Let's see what happens next, okay? It's still right on my price. Okay, that would have taken me out right there. That dropped down. I would have gotten flat, and then it popped up. So I probably would have got out of that trade early by mistake, I think. Let's see. Yep. I would have hopped right back into this trade. I would have flattened out and said, nope, wrong. So the head fake would have caught me on that one. I would have corrected it immediately and gotten long. As soon as we took those candles back out, those wicks, you know, it's clear that that was the head fake. And then let's see what happened the rest of this session. Okay. Another head fake didn't take out the low. So in this instance, I'm still long. And there you go. That's what you want to see happening. It doesn't take out the low, and it starts building at the top of the Open 5 an ebb and flow range. That's telling you you have an inflection point. This would have confirmed that. That's a high volume node from the overnight of this day, whatever day this is. Again, I don't care. Just want to look at the price action. And then look at what happens next. That's why you play the Open 5, because if you were smart here and cut your losses and stayed with the price action, you're long, call it 01, call it 02, call it whatever you want, and we're at 08 up here. You know, forget what happens the rest of the time. You caught a really beautiful trade. That's an Open 5 long. That's what they look like. That's a perfect example of a head fake. And I just told you how I would have played it. I would have been in, stopped out, back in, you know, all in the course of a minute on that trade. So that's a really good example, whatever day that was. All right, let me get some questions. So I'm mentioning the overnight. Okay, Jonathan, this question seems to keep coming up from you and a couple of other people. So let's just be really clear. Overnight volume and overnight correlation in any setup you use it for or any bias you use it for tells you one thing and one thing only. Was the overnight aggressively traded, yes or no? That's the volume question. If the volume is low, and that varies different times of the day, if the volume is low, then it wasn't traded aggressively, and whatever happened overnight is likely to get faded at the open. If the volume was high, there might be a reason, news or whatever, but that's a more significant event. It's that simple. Correlation, again, if you want to see the market moving together. If it's not, a lot of this won't work as well. So correlation is your clue that the trade will probably be there. Or, you know, or not, but if you don't have correlation, then it's really hard to play because, for example, what I was showing you with the NQ trying to pull the ES up and failing, okay? If it's not a correlated market, the NQ could be moving because Google announced earnings or Apple, you know, announced the, you know, take your money, you know, iPhone 95 for $10 million each or whatever it is, you know. So you're overthinking it. It's not that complicated. Is the volume high or low? Are we correlated, yes or no? If we're not correlated, be careful. If the volume's high, the opportunity is probably greater. That's all there is to it. Don't think it beyond that. Is a head fake on the Open 5B significant? No, there's no such thing as a head fake on the Open 5B. What you're talking about, Joey, is ebb and flow on the Open 5B. The head fake is only at the open of the Open 5A. A head fake can't happen at an inflection point, because the head fake by definition is everybody's watching the open to see what's going to happen, and one guy tiptoes in and says, okay, it's quiet, I'm going to sell my 1,000 lot. That's the head fake, because everyone else watches to see what happens to him. He gets filled, he gets filled and sweeps the book down 3 points. And then the rest of the guys say, okay, I'm going to buy that, not sell it, because they wanted to see the head faking. Do you understand that? It's a very subtle point, but it's critical. The head fake is about the emotion. It has nothing to do with ebb and flow at an inflection point. It has to do with psychology of the opening of RTH. Do you understand that, Joey? That's a critical point. Okay, next question. Yes, the rhythm and tempo. Tom continues to be our finest fast learning student. The blink is exactly the rhythm and the tempo. That's all there is to it. This is a music trade. If you're a musician, watch it like it's music, and you'll see it. Yeah, you know, the head fake thing is practice, 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 Amy. You're absolutely correct. I'm going to show you more examples, but I'll tell you what else it is. It's very individual. You know, if I'm really on my game in the morning, I catch the head fake right away. Like this morning, I just saw it and I said, there's no trade there. But if I'm rolling in here and, you know, my back hurts and my head hurts and I can barely walk because my joints are on fire and yeah, you know, I'll make mistakes with that all the time. The key is just get out of your mistakes. If you guys remember that trade that I lost $3,000 on in front of you back in the workshop in 2019, that was an open 5A trade on a day that I felt crappy and I stuck with a fade position and I got screwed. I had to scalp the rest of the day to break even. So that's a perfect example of how not to do it. Yeah. Okay. Joey, will you please stop asking about the Open 5B? I will explain the Open 5B when I explain the Open 5B. Sit down, please, and listen to my explanation about head faking. I still did not see you say yes, you know, there's a yes. Okay. All right, let's see. Isn't it fun, guys, when a 60-year-old is talking to a 70-something-year-old like he's a child? We revert as we get older. I'm just screwing with you, Joey. You know that. Okay. Yes, Amy, if you're going to be a scalper, the best thing you can do is teach yourself how to be wrong really fast and be wrong by hitting flat and cancel. You got to do that. You know, look, if you only have small losers, you can be wrong 50, 60% of the time and still make money. I don't recommend that, but you can. But if you keep your losers small, again, it's just math. These things overwhelmingly work as long as you don't let your losers run. If you let your losers run, you're never gonna get even. It's just not gonna happen. So, all right, so Joey's 77. So here's a 60-year-old chastising a 77-year-old. And you're remarkable for 77, Joey. I couldn't do this. God, I don't know if I'm gonna be able to do it at 61, let alone 77 or 71, if I'll even be alive then. So anyway. All right, let's see. That's exactly what you're looking for in volume. Good thing, Jonathan. I know sometimes it takes me 2 or 3 passes with you to get it through your head. That's okay. All right, cool. So that's one example. Let's go find another one. I'm just going to, literally, what I'm doing here is I'm just looking for where the yellow lines start. Let's see. Yeah, this was a good example of a head fake. Oh, that's a perfect example of a head fake. Look at that one. Okay, look at all that volume on the buy side right there on whatever day this is. And look what happened. You know, a couple people joined it and then the sellers came in overwhelmingly. Look at the delta. This is why you have the delta. This buying got sold. And then there was a tiny attempt to buy. And so, you know, this was just the market. That's 631 right there, okay? So that's the head fake buying. And then the sellers just said, oh, yeah, we'll show you. And, you know, so we went from what was that? That was 33.66 to 58. You know, if you're looking for really big scalps, guys, this is where you find them. You know, again, I'll tell you an anecdote. My surfing buddy, and this is a guy I went to high school with. He's a master carpenter. He makes really, really expensive cedar closet build outs for really rich people. I mean, I'm talking $100,000 closets. And he surfs, and that's all he does. And he surfs around the world. He'll work for 6 months, make a couple $100,000, and then, you know, go to Australia and surf for 6 months. That's his life. And so, you know, every now and then we get together for a beer, and he saw me doing this. And he's like, wow, could you teach me to do that? I said, well, God, there's all this stuff you got to learn about it. He said, no, just what you did right there at the open. Hey, I don't care about this other stuff. And I thought, well, yeah, I guess I could try. So that was my first attempt of really making the Open 5 just ridiculously simple. And so, gosh, he tried on and off for probably 2 or 3 years to get the hang of it. He'd try for a few months, lose a few bucks, go surf, come back, and connectivity was bad in those days. So, there were a lot of places he was surfing at he couldn't trade from. And then after, a couple of rounds of trying and failing and, deciding to try harder, he got the hang of it. He practiced and got the hang of it. I gave him one drill to do, trade the Open 5, nothing else, no other drills. And I was probably 18 months after that, he started making money. And I'd say he makes money. Well, let's break the metrics down this way. Of any given 5 days of the week to trade, the Open 5A setup is probably a decent trade 2 or 3 of the 5 days of the week. And the other days, it's either too choppy or the head fakes it's just unclear. Let's just call it unclear, okay? So if you take that three days a week, or, what is that? Maybe 12 times a month, you've got a setup. When this works, it works like this, okay? This is a really good example. That's what a good day in the Open 5 looks like. Not a trend day either. There's examples where it's a trend day, which are even better. But this is a real quick 8 points, If you're doing that with a 1 lot in the ES, who can do the math? What's 8 times 50? Anybody? Please type it in the chat. $400. Okay. So if you did that every morning and 3 days a week, that was available, that's $1,200 is your expected value. And then throw in some slippage and errors. A good trader should be able to make 800, 900 bucks with a 1 lot a week doing this. And that's pretty much what my surfer guy did for the first probably 5 years. He would just be totally stoked about that, using his words. That's gas and food for a week, and then he can go surfing and not worry about spending any of his capital. And that's how he thinks. And he's my age, by the way. Still surfs big waves and crap like that. He's got a death wish, but whatever. Anyway, so, and then he started scaling it a little bit, and now I think he trades up to tens. If there's a really good setup, he'll take. He does the ace king thing that I do. He's a poker player too, and I think his ace king is 10 lot. So think about that. That's a $4,000 trade. Typically, 3 days a week. Do the math yourselves, guys. That's not an aberration. Is that easy? No. Can you do that after 6 weeks, 6 months? No. Can you do it after a few years? Yes. Can you do it consistently? Yes. Can you make a living just doing that? Yes. Okay, that should be enough yeses for you. Okay, let's find another one. Okay, here's another one. Ooh, this is a really good one. This is a really good one. This is a classic example of a head fake that persisted for a while. So this is a really rare Open 5. This is one of the Open 5s that I would have traded both ways. And if here's the open right here, that's the opening 15 seconds. And it was buy, but it didn't affect the price. But look at this delta. If I saw that delta on that bar, I would have got long on this little wick because, why not? With that much buying delta, I would have got long right there with a stop right under it. And, it turns out that, and again, hindsight's 20/20, but that was a really sweet little pop up from 33, 46 to 53. Again, look at this, guys. These are 7-point moves. It's mind-boggling how quick these go, right? But then this is why you have to have a stop to lock your profits in, because look what happened. We got to this inflection point, whatever it was, and the sellers just said, cool, and they jumped in. So, that was the kind of case. You take your profits, and then, I don't know if I would have shorted that there. I probably would have been thinking short, like right in here. And so I would have maybe got short there at 48, maybe 49. And so, you had a nice run back to the 40s. That's a perfect example of how you could have played that one both ways. And then, regardless of what happens the rest of the day, you're done. You made some money, go golf or whatever it is you do. Okay, yeah, I can do this all day, guys. There's examples every single day. Let's go. Oh, you know what? Let's go look at some examples in the NASDAQ because it's just so much crazier to watch. So let's do that. I will get to questions and we will talk about the Open 5B, but we won't do it when Joey asks me. We will do it when we get there. Okay. By the way, the Open 5B is a structural play, and the people that trade it really like it because it's a much slower trade. You don't have to react so quickly. Okay, so here's the NASDAQ. And this is a perfect example of why there was just literally no trade today. You could see how, this action was what I was telling you real time. This was an example of the NQ trying to pull the market up, and it couldn't. So let me go back to risk on, risk off. Risk on, the NQ should have been able to pull the market up because the NQ represents, at least theoretically, riskier assets. In this environment, that might not be true. But that's generally a good way to look at it, and certainly riskier than the S&P 500. That's a legitimate statement. So it's just, when you see that, just sit on your hands. Now let's go find another NQ day, because there's some days the NQ Open 5 is just crazy good. But you got to be an NQ scalper to like the NQ Open 5. Oh, here, beautiful. Okay, this is a classic example. I love this one. This happens all the time in the NQ, not in the ES, in the NQ. This is why knowing your instrument's so important. You get this crazy ebb and flow right at the beginning of the open of the NASDAQ. Sometimes this is because of earnings, sometimes whatever. Who cares why? Look at the deltas, perfectly balanced. Look at the price action, perfectly balanced. Key point, the Open 5A low is never taken out. It gets tested 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 times, and they cannot take it out. You do not need to be a brain surgeon to say, I'm going to get long right here with a stop right here because I have absolutely nothing to lose. However, this is very common. That occurred at 8:36. A minute after my traditional Open 5. Very, very, very typical in the NQ, which is why you focus on the ES. But if you're seeing this happening, by all means, join this. That's a video game scalp. Stop underneath it, let it rock and roll. It ebbed and flowed and shot its way from what? 11,403 to 11,469. Let's just call that 60 points. It's more than that, but 60 points in the NQ. Math majors is what? The NQ is a $5 tick. So what does that give us? I'm waiting for a month. Thank you. Okay. Do you see how you can make, these are one lot numbers, guys. You see how you can make a living doing this? If you don't, you're not paying attention. Okay, every instrument's different. There's no Open 5A in anything that is not a derivative of a derivative of a derivative. So there's no Open 5A in gold. There's no Open 5A in oil. Those instruments don't work the same way. Those are based on true commodities, and they trade differently. This applies only to indexes in whatever market you're in. It's true in the indexes in Europe for the same reasons it's true here. So any index that is a derivative of the derivatives of the equities, any futures contracts that's equity-driven is fine, as long as it's got an RTH. It's just like the first hour high and low. You need that. That's a prerequisite, but that's all that matters. Do not do it in oil, gold, silver, anything like that. It doesn't apply. Those guys don't have the same parameters on their funds. A guy who's a hedge fund trading silver and gold can do whatever the heck he wants any time of the day because that's the nature of the market. Nobody's going to give a guy $1 billion to trade gold and tell him he can't trade overnight. That would be insane because of what happens in Asia overnight in gold and in the Middle East overnight in gold. So this is why instruments are so important. I apologize for fire hosing you guys with this information, but I'm doing that intentionally today. There's a lot of background and bias to this trade, the kind of things I'm just telling you on the fly here, but the trade itself is ridiculously simple. And we're going to review that in just a second. But I wanted to get that point in about the NQ. So you really want to watch the ES, but you want to pay attention to the other instruments and what they're doing. Right now, by the way, the RTY is trying to lead up. Once again, this has been going on over and over again. Okay, RTY is up 0.6, almost 3/4 of a point. NQ is down. That's a lack of correlation. It might be one instrument or not. I haven't even looked at the advanced decline yet today, but this is a warning sign that something's going on. It could be earnings. It could be one instrument, whatever. I have Thinkorswim running on my other monitor, on my other computer. Give me 2 seconds. I'll go over there and look. I'll answer that. Let's see. Apple is down, and that's, yeah, Apple Micro. It's the techs. The techs are pulling down the NQ. RTY interestingly, is strong in really, really small medical stuff. That's what's pulling the healthcare, is what's pulling the RTY up. So we are not correlated today, guys. Be very careful. Those two things are not correlated. So that's a warning sign that today could be a choppy day. Okay. I'll do questions, then I will review, then I will discuss Open 5B, and then we're done. So, question, when do you take the Open 5A within the first 15, 30 seconds versus after snapshot or 1 or 2 minutes? I get the question, Joseph. You're trying to be a little too precise, but I get the question. Let me try to put it into a sequence for you. Let's review the sequence of the thinking of the trade, and we'll go from that. David, part of the problem with the fire hose concept is I'm just so excited to teach you everything that you need to know, and I know a lot about it, obviously. But the other reason is, and I'll tell you this honestly, I feel what's the right word? I feel a sense of urgency in my teaching because I honestly have no idea how long I'm going to be here. My body's been through so much hell. Any given morning, I might not wake up. So, I want to get as much done as I can. Put it that way. All right, so let's go back to the syllabus and review. Okay, this is the simplest setup that there is. I don't know a setup that's easier to see than this from a simplicity point of view. That is not true from an execution point of view, however. It's hard to execute because it's so simple, and you have to really focus on the things you need to know and nothing else. Nothing else. Not the VIX, not the bonds, not the dollar, nothing. The tick, none of that shit matters. The only things that matter, number one, what happened overnight? Was there high volume or not? Was it correlated or not? Number two, are there any significant high volume nodes to lean on? Well, today was a really good example. We've been leaning on them all morning. So as I started to say at the beginning, remember what I said about the price points today? Jeff can predict the future, okay? Where were we sticky? We were sticky at 3,400. It got bought. Then we fell through that, and we got to 96. I told you it would be 90 to 95. We hit it right on the nostril. It was that other low, the low of the previous day. That happens every day, guys. This is that easy. Just combine yesterday's volume profile with the overnight, and you'll see where the HVNs are. Don't overthink it. Okay. So that's the setup. The best tool to trade this, without exception, is a 15-second bar by bar. Forget the ranges with the LRCs. They don't apply until we get further into the day, past the first 5 minutes anyway. And the bar by bar delta is critical for you to read it right. If you're just reading the total delta or the cumulative delta, you'll be wrong because we don't care what the cumulative delta is. We care what's happening bar to bar to bar. And I just showed you a bunch of examples why. Market's moving up, but it's getting sold. Be careful. Market's moving down, but it's getting bought. Be careful. Forget words like absorption or icebergs or any of that other nonsense BS and focus on what's happening. Are people hitting the bid, but it's not going down? That is by definition the market getting bought. Okay, that is what I mean when I say it's getting bought. If you see the kind of price action we saw right here, okay? That's a perfect example at that 96 inflection point. It's dropping and then it starts getting bought. This is a high volume reversal. That's another great setup we will talk about in another clinic. But this was not obviously Open 5 here. That was later, but the Open 5 was clearly no setup. That doesn't mean those HVNs aren't places you want to watch. You had some really sweet scalp trades that were just ebb and flow. The wording that Tom used was perfect. I want to go back and look at it again. It was just the tempo and the rhythm. That's all you're watching. The Furu world of technical indicators will convince your brain you need to construct analysis for this stuff to work, and it's wrong. Your brain is really good at art, guys. This is art. This is like music or painting. This is not math. All you need to do is look at the pattern. The math will deceive you. "15-second is the place to watch this. Watch for head fakes. Market orders only. Absolutely no exceptions to that. You can limit out, but you need to trade a stop, and that's the way to limit out. Trade your stop and just have your stop get hit profitably. That's the way I trade this. I don't use targets at all. They're insane, total daft to try to think of targets. You know, I even see good traders posting that. One of my friends in the UK, PJ, the PJ indicator guy, he posted that yesterday. I finally got to my NQ target. You know, I raped him on a PM. I'm like, you're so much better a trader than that. He said, I know, but my Renko, you know, I'm like, you fool. You know, and that's you know, literally a good trader has to understand that what he thinks he was seeing on the Renko or whatnot was, you know, a coincidence. That's not why it was, you know, a good target. Targets are meaningless. You take whatever the market gives you, and you be grateful it did. All right, we'll get some more questions, and then we'll talk about the Open 5B. And that's not just from Amy and her experience riding horses. It's from every experience in the world of nature. The world, the entire globe. I'm not talking about humans. I'm talking about the rest of the ecosystem, the non-stupid ones. Humans are idiots. Take every other thing on the planet and watch it. It has rhythm and it has art. Look at fractals in sunflowers. Look at the way a horse gallops. Look at the rhythm of its four legs. How does it do that? How do you keep four legs in sync like that? You can't explain it mathematically. You just have to appreciate the art. Trading the Open 5 is exactly the same way, guys. Don't overthink it. Oh, this is a total Zen trade. Took me a long time to get my Zen working on this trade. You know, I started studying Asian philosophy in college. I have a minor in it. I have a degree in it. And it was always something I wanted to aspire to, but I worked for IBM. I was a corporate asshole. So, you know, try to blend those two things together. It's really hard. And that was one of the first things that indicated to me that I had no business being in corporate America. I would spend most of my time there just telling everybody they're full of shit, which is what I did, and that's why I left. So yeah, corporate America to me was like high school with money. It was like the same nonsense that went on in high school, but it was with people with money, and it was such distaste. I was so disappointed. I mean, IBM's the best corporation on the planet, and it was just as bad there as anybody, if not worse than anywhere else. So lesson learned. Okay, other questions? Ooh, good question from Ed. Is slippage must have a problem with this setup? Who wants to answer that for Ed? It's a good question. Is slippage must have a problem? You're going to say no. Well, let's think about this. Define slippage, anybody? It's from where you intended to enter to where you actually entered. In this particular setup, does that make sense? Do we care? Nope. Yeah, the people saying no are exactly right. Slippage is a furu concept, Ed. It's not true. It's true, but slippage implies the following. Okay, I want to get long at, this is my furu voice, I want to get long at 3.5. So if I enter with a market order and I get filled at 275, I have slippage of 3 ticks. Okay, true statement, total fucking nonsense, meaningless. I want to get long on the price action. If it's a tick or 2 or 3 in one direction or the other, it's meaningless because I just showed you trades that are 6, 8, 10 points, 40 ticks. Why do I care about 3 ticks, 2 ticks, 4 ticks? Understood? Don't be a tick. Oh, I love that, Amy. Don't be a dick for a tick. Yeah, you know, this whole idea that you can predict your entries that carefully and that you can be that precise and, you know, don't have slip. That's such nonsense. You know, that's just the financial industry selling you garbage. That makes me so angry. Can't even tell you. Okay. Yeah, what makes markets move? Yeah, watch the delta price and Y price changes. Watch that session. Slippage is nonsense. It's something, again, slippage is like MAE and MFE and risk reward ratios and all that stuff. It is stuff that you evaluate the past with. You look at results and you say, I could do better, or you look at results and say, I screwed up. But it is not something you do to evaluate opportunity. It is something that you do to evaluate results and performance. That's the distinction, Ed. I hope that's clear. Okay. Other questions? Oh, resting limit orders and liquidity. Yeah, no, don't try to think liquidity in this trade, guys. You don't know enough and you don't have nearly the skills. I didn't even consider liquidity in the Open 5 trade until I had been trading order flow well for 5 years. And I'm now at year 7 on my order flow, well, 8 if you count what I was doing with IRT. So it's not important enough because it changes too much in the opening 5 minutes. That's the short and long answer to that. Okay, liquidity is important, but liquidity is the PhD, guys. Listen carefully to this. Look at what we talked about in the boot camp and in every other session we've done here, okay? Let's unhighlight that, okay? What's important is understanding context, and I'll talk more about that when we do the intermarket and context session on the 9th. But most importantly, execution is about price action, and that's it. Nothing else truly matters. It's really that simple. The other stuff, liquidity can help you understand context and price action, but that's the PhD. You can trade with the associate's degree, the community college degree on price action. Then you get like the graduate school level and you understand structure, and that gives you an additional edge. But to think about that in the Open 5 in the context of liquidity, you are so far ahead of your skill set. I can't even tell you. You know, when you've done it 2,000 or 3,000 times, that's a good point to start thinking about adding liquidity as a factor. I hope that's clear. Okay, I don't see any other questions. So the only piece we have left in this session is to discuss the Open 5B, and let's just do that really fast because that's more of a trade that I will talk about when I talk about first hour high and low. It's really not that important other than it's an inflection point. So on my charts, all of them, you'll see yellow lines, and on my Sierra charts, they're now yellow too. I corrected that error on the Sierra color scheme. It now matches completely, so you'll see the same right here. I've got, you know, blues for first hour highs and lows, yellows for the Open 5s, the green is the fast LRC, the red's the slow LRC. That's the scheme I use. If you're gonna mess with it, don't show it to me and expect me to help you with anything, because keep your colors consistent. You know, don't complicate it for yourself. It's just not worth it. Okay, so let's go and talk about the Open 5B now. So the Open 5B is nothing more than an inflection point defined by the opening 5A range. Joey, are you listening? That's it. So when the Open 5A ends, you know, basically, you know, the lines paint from the beginning, but after the first 5 minutes, so after right about here, then those two spots are just inflection points. Look how good it was at 641. That's not an Open 5A, that's an Open 5B. And you look at it and you say, well, that got sold before. So boy, 2 15-second bars here and a huge turn in the delta. That's a high volume reversal actually. So God, you know, what do you have to lose putting a short on right there? Anybody, 2 ticks, 3 ticks, that's it. You have, you know, that's an ace king. That's what an ace king setup looks like. You know, it's moving up, sellers enter, the delta shifts the other direction, you short it, you put on a 2-tick stop and you let it rip. It starts moving down, you get a stop between you and your entry. Let's say you had slippage, Ed, and your entry didn't even go till what? 04, you know, horrible entry, you missed 2 points. Wonderful, you're still in a good spot. It moves down, it's down at 0.75, now it's at 02. I'd move my stop down to here. Then it comes down. Now it's at the Open 5 low. I'd be careful. I'd be thinking about keeping the stop really tight. The bottom fell out, so I'm in good shape. Now I'm going to move my stop down to right there. So it's a 00. So even if I miss 2 points on the entry, I still got 2 points of profit here by watching that Open 5B inflection point. So again, to be clear, the Open 5A is a momentum trade of the 15-second bars. That's it. The Open 5B is the inflection area defined by the opening 5A range, used to trade as every other inflection point is. When we get there, it's not a long, it's not a short, it's a place where you pay attention. So if you were watching this trade or if you were in this trade and you got here, I'd be really focused on what's going to happen next. And the market was really clear to me about what's going to happen next. No brain surgery required, no metrics, no analysis, no spreadsheet, no nothing. All I got to see is right here. Okay, we're going up. Some sellers entered, still getting bought. Looks okay. I'm watching for an opportunity. It's a long or a short. It's one of the two. It's probably not going to just sit here. So if it sits here, we'll watch it while it sits here, and then we'll take a trade when it leaves this area. That's the key. So what does it do? It leaves aggressively. That tells me, okay, I want to be short. It's at the quote unquote support. It's at the area that was the last ebb and flow. I like that because that even makes it more aggressive one way or the other. So I'm short here. I'm still short. I'm going to hold it. My stop is still a couple of ticks above that inflection point. I've got more heat now potentially. That's okay. The price action supporting me. The next bar is going to be the one that's going to tell me whether I'm staying in this trade or I'm getting out with a loss. And that says stay in, ebb and flow, nothing changed. Boom. Thank you, Jeff. You just had a profitable trade. It's that simple. Don't overthink it. This was a perfect Open 5B today. You know, this is, so these people would say, well, if you're so good at trading, why do you teach? Well, this is an example of a day that probably cost a guy like me or Lee $10,000 to not trade and to teach. That was a perfect setup. And so, you know, every time somebody says that in this session, our first response is to want to strangle them. And our second response is, you know, if you really understood this, you'd realize if there isn't some altruism to somebody that is teaching you, that's you know, truly able to teach you, not a furu, but somebody that actually has the goods, they're basically giving you something because it's costing them a great deal. Understand that when you're dealing with anybody as a mentor or a teacher. You know, that's my beef with NinjaTrader in a nutshell that I talked about at the beginning. They do not friggin' respect my time. I shouldn't have to get tech support and have them act like they've never heard of me before when I've been a customer for 6 years. And, you know, and I represent a whole lot of licenses in the community that I teach. They should know instantly when I email, oh, that's Jeff. Hey, Jeff, what's going on? How can we help you? No, have you rebooted your router is the response. Yeah, I'm a certified network engineer 40 years. I think that was the first thing I did, you idiot. That's the guy that's the head of technical support. There's the problem with Ninja. That tells me they're about to go out of business, not that they're trying to help me stay in business. That's your answer. Okay. Yeah, NQ does great 5Bs. I know, Bar, you like to watch them. By the way, gold and oil do have really, really good opening 5Bs because, again, those are structural, and those trades are not based on the overnight flipping. So here's a really good example of an open 5B long in CL. Again, you need no footprints, no structure to see this trade. Just how many times did it try to sell off through the opening 5 low there and then rally away from it? You count them. You know, 1, 2, 3, 4, 5, 6, 7, 8, 9, 20. You know, clearly the market was, but this is classic oil. It will overshoot inflection points. It does that all the time. So you got to give oil a lot more room. And gold does that too. But here, let's check out gold. So there's a perfect, look at that. That's a perfect open 5B short on gold that now is becoming a really sweet trade. Wow, 6-pointer there. Gold's a profitable instrument, but it's also, you can really lose a lot of money because, you know, the tick value is pretty high. So, you know, micro gold is a good place to practice if you're new to gold. All right, almost 7:30 here. We got 10 more minutes. Let's take questions. Is it plugged in? Is it turned on? I'm not sure what that was about. So the open 5B structure matters in commodities. Yes, because it's an inflection point. Again, there's no open 5A in commodities that are not derivatives for one simple reason. Because the people that trade it don't have the same restrictions that equity traders have. That's all there is to it, Jonathan. It's that simple. By the way, I always use the opening of the New York, not oil's open, which is a half an hour earlier. I get asked this all the time. I used to use the half an hour earlier mark, which would have been right here. It's meaningless. I've tested this 112,000 times. That's an example of something I would back test. That's the only example of something I back test. I tell my little AI bot to go look at every example of that and tell me whether 6 or 6:30 was a better edge. And the answer overwhelmingly is 6:30 because that's when all the capital in New York starts playing. Forget when oil used to open in the pit. Meaningless. Same story with gold. You know, gold dies out early in the afternoon because it settles at 12 o'clock instead of 1 o'clock, yada, yada, yada. But the levels still work because it's the same concept. You're measuring an inflection point of the opening range. That's all. So good question. Good question. Those are the kind of questions that help everybody learn. And it shows me that you're paying attention. And that's why when I jump on you, when you ask a question that is not showing you're paying attention, because I can tell just by the question. You know, any good instructor can do that. All right. Let's see. All right. I don't see any other. Did I miss any questions? Oh yeah. That, you know what? It's not how important, Colin. I would say that the capital THE, the most important thing for a good scalper to be is good at being wrong. If you're good at, look, if you're good at being wrong and you have a whole bunch of, this happens to me all the time. Let me pick a random set of statistics. Give me 2 seconds. I'll look them up. You know what? Let's take a 1-minute break. And when we come back, I'm going to tell you some statistics about Jeff being wrong. And then we'll take some Q&A on this. And that should be a good place to wrap up. So stretch, get some coffee. We'll be back in 1 minute. Call it 7:24. And I'll talk about statistics of wrongness, because that's a really good point, Colin. You know what I like to say about that, Jonathan? There was one time that I thought I was wrong, but it turned out that I was mistaken. And by the way, I got to tell you guys that I got to tell you, for a guy like me who's reasonably successful at what I do and, been through all the stuff I've been through in my life and yada, 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 I'm a pretty strong personality. I'm a pretty confident guy. Nothing shakes me up. That's pretty obvious, I would expect. So for a guy like me to learn to admit being wrong, that's why I started surfing the markets. I want to be in a room where everybody's smarter than me. I don't want to be the smartest guy in the room, because then I'm going to be stuck in my ego and not stuck in reality. Key point. Key point. Yeah, no, we're not going to do a class on making our own stats, David. God, yes, I've read your chats, and we need to talk one-on-one again. But once again, David, the only thing, and I'm still waiting for 30 consecutive days of David doing nothing but scalping the open and letting it ride from that. Shut down, go do something else. I'm still waiting for 30 consecutive days of you doing just that and not asking me any other stuff, because that's been your assignment for 3 months and you haven't done it yet. Okay. Lee mentioned, I'm going to go ahead and take the break. So let's let you guys post the questions. I'll get them in a minute. I'll be right back. I need to refill coffee. So back in 30 seconds. All right. Okay, folks, I'm back. My headset is annoying my ear, so you can hear some noise as I fiddle with it. Okay. All right. I want to address something David said, and this is not directed solely at you. It's directed at everybody that I try to help. If you don't listen to somebody that's mentoring you, you will, A, lose them as a mentor, and B, lose the value of what they're trying to explain to you. You're exhibit A, David. You have one assignment. Trade the open 5A, make $100 and shut your fucking computer down for 30 days. That's your assignment. Do not ask me another question until you can send me a report of the 30 days. End of conversation. Okay, let's see. Lee mentioned on one of the webinars that he uses the lower time frame footprint chart on the open 5E. Okay, first of all, this is not Lee's webinar, Joey. If he wants to answer that, that's fine. You can use a footprint chart to do it. An example of that would be the one that's running right here on my screen. Another example would be this one over here, except I don't have the lines on it. A better example at the moment would be this one here. So let's put that up. Okay, and this is the ninja problem. Doesn't want to score. There we go. Okay, so could you do this right here and be looking at, the buy sell up there? Sure you can. Why is that completely wrong for this setup? Because I don't care what the buy sell is up there. I don't care if there's unfinished business up there. I don't care if it's a clean exhaustion. All I care about is the price pattern and the delta. Okay, does that answer your question, Joey? Cool, thank you. Okay, next question. In Sierra, one can replay each chart for any day period at various speeds. After this class starting, I'll go back 30 days in Sim. Not a bad idea, Mark, but here's what I'm going to tell you about that. Doing replay is a furu game. Yes, it can teach you a little bit, but it won't teach you a fraction of what you'll learn doing a Sim real time or doing real money real time. And the reason is very simple. Your brain remembers stuff you don't know it remembers. A pattern from a week ago or 3 weeks ago, if you were watching the market that day, your brain probably has it somewhere in there, and it's going to give you bias. Trust me, this is a true statement. Replay, in my opinion, I don't want to go so far as to say it's useless or it's nonsense. Those would be my words for just no value whatsoever. Of very little value is what I would say. I would much, much prefer you trade it every day in a sim or in a micro and practice it with real money. You'll learn really fast. That's the beauty of the micro. You can practice it with $50 a day. And the sequence I would do is sim, micro, big contract. I would do nothing in replay or looking backward. I did that today only because it's a good way to look at examples. And that's fine. That can show you examples of it visually. But watching it play out with replay and trying to trade it and thinking you'll learn something, I don't think that has value personally. Okay? There are people that disagree with me on that one. That's why I said it the way I did. That one is to some extent a matter of opinion. Okay, but my opinion is just better than everybody else. See, that's the ego you don't want to have as a scalper. You want to have the attitude that I'm an idiot. I'm going to be wrong here. I know I'm wrong. I know I'm wrong. You have to think that way. All right, let's talk about statistics. I just copied them down from my other server. And, to be fair to David and his question, it's not Google Docs. It's not Excel. It's SQL Server, David. I'm writing code in C, and I'm running it on SQL Server, and it's code that I wrote 20 years ago in machine language, okay? So don't even start to ask me to explain it. It's a baby form of AI that just constantly is looking at my trade database. I save every single trade. I throw it in a big SQL database, and I let the thing analyze it, okay? So that's the answer. That's how I do statistics on my trading. I'm not talking about metrics like MAE and stuff like that. I'm saying, okay, Jeff has traded the Open 5A. I have tagged trades called Open 5A trades in my database. And at the moment, I think there's 112,000 of them, something like that. I'll have to look again. But whatever it is, I just keep throwing them in there and I let the thing just think. And that's how I discovered the Ides of Monday. My bot came back to me, and it's kind of a bot. It's a long story what it is, but it's a piece of software I wrote and sold to Dow Jones in 1999. Look on my LinkedIn page under yourput.com and you'll see. But anyway, it's just a really intelligent, God, it's almost like a Visual Basic script if you understand that. The code is not complicated. The beauty is that it has a really large database to play in. And so it just comes up with interesting stuff. Here's an interesting statistic, okay? So I just went back and looked at it and asked it, when Jeff is wrong, okay? If I cut losses, here's a bunch of things it just told me. If I cut losses somewhere between 2 and 6 ticks, anytime I'm consistently doing that, I'm massively profitable. The only time my equity curve starts getting damaged is when I start having losers. And I'm not talking about one instance, but several of them or a lot of them that go longer or larger than 6 or 8 ticks. So 2 points on ES. That's kind of the sweet spot of me being wrong. And so I looked at that a long time ago, and that's kind of one of the reasons I developed this LRC range thing. I realized that one of the ways I could mentally get in and out of trades and understand what being wrong meant and what being right meant was not to look at the prices or the volume, but to look at the ranges of that. That's how I landed on this LRC idea in the first place. So that's a little bit of history about that. So So with respect to statistics, my most profitable days, are you ready for this, guys? On my most profitable days, I typically will have a lot of little tiny losers. 1 tick, 2 tick. What's a lot? Sometimes as many as 30%. But my overall average for that, I'm about 84.7% profitable right now. But on any given day when that number is lower, as long as it's lower and the ticks are small, those days are still profitable. But on any days that it's lower and I let the ticks go farther, like it's a high volatility change in the market, like the VIX went up, volatility suddenly shift, and I didn't recognize it right away and I wasn't stopping out quick enough, those are the days I lose $3,000 or whatever, Those are that's the days that I have my big losers. By the way, that rarely happens to me anymore. The last time it happened was that one you guys saw in the workshop last year. I haven't done that since, which is good. But it happens. You give yourself a break. So what are my overall numbers and what should you look for? I just pulled Open 5A all by itself. And for Open 5As, here's the numbers on days. I take the trade, and this stunned me, 3.2 days a week. So I had just guessed at that one. I'm stunned that I was that close, but it's a little more than 3 days a week when the trade works. So call it 3. On the days I take it, and this is, so it's not of those 3. Now we're at 100% again. So of all the ones when I've actually taken the trade, again, taking out that, if I was right or wrong stuff, most of the days are profitable. Very few aren't, and the ones that aren't are the ones where there was no definable setup, and I tried a couple of times, and I just couldn't get any traction one way or the other. And those are the days I typically lose. I'll throw this into dollars again, just for reference. So, assuming the same account size, if a good day is you can make a couple thousand or 10 grand, if you scaled it in a bad day, I feel bad, I'm going to trade micros. That would be an example of that. I might go down 100, 200 bucks and say, all right, that's it, penalty box. That happened to me a couple of days ago. I just wasn't seeing it well. That's fine. You'll never go broke losing $100 or $2 a day as long as you don't do it every day. If 3 days a week you're profitable and once or twice a week you aren't, you'll be fine. So some other things the statistics tell me. The Open 5A head fake occurs 60% of the time. How about that? So of the Open 5A days, 60% of the time, 1, 2, or 3 or 4, that's how I measure that, of the first 15-second bars will be not what happens the rest of the 5 minutes. That's my definition of a head fake. So you got to be nimble. The conclusion you can draw from the statistics is if you are nimble, it works. If you're not nimble, it doesn't work. Learn to be wrong. Okay. Okay, let's see. I'm going to go back to last week. I had 85 to 94% solid trades in GC. Then one day, yeah, it wiped you out. That's you gotta. The way I solve that is twofold, Colin. I have the Open 5A is like video game scalping for me. It's like my parents gave me. For those of you not in the United States or of a certain age, this won't make sense. But if you're over 30 or 40, it should. And my parents would give me, here's a couple of rolls of quarters. Go to the arcade and play, Frogger or whatever. I'm older than that, but you get the idea. And so I look at it like that. I have a certain budget that I'm willing to invest in the Open 5A. It's 100, 200 bucks. And if I lose that, fine, because there's other days I make 10 grand, so it doesn't matter. But if I do that, then, even if I have a couple of bad days or, whatever, I don't overwhelmingly kill myself. And so it's really important to have that kind of how much risk am I willing to put on this particular situation? You have to assess the quality of the setup. Is it ace king? Is it a pair of tens? And do so accordingly. Good question. Okay, let's see. Google Excel completely falls apart if you have any significant data set. Yeah, the only thing Excel is useful for is as a front end to a SQL database in Access or whatever your SQL server of choice is. SQL as in SQL if you're too young to know what SQL is. Structured query language. It was an attempt to use English to ask questions of a database, and it actually works pretty good. Notice that the NQ is now down 0.75%-ish, and everything else is flat. That is not boding well for the rest of the market. I'm continually adding to my short position, as I said at the beginning, but I'm doing it with triple ETFs up to 3,800. So, this is a scale in. I'm at 44% right now of my position. All right, next question. Don't mean to open a can of worms. Okay, anytime you start a question with yes, but, which a few of you do, or I don't mean to do, or I apologize, or I'm sorry if someone, don't do that. Just ask the friggin' question. So, along learning to do one thing, questions arise in forms of curiosity. Yes, David, and that is exactly what is wrong with your learning skill. You are not mature enough to take your curiosity, put it in a box, and leave it there for 2 months. That is what you must be learning, my friend. It has nothing to do with that curiosity is right or wrong. It has to do with that you have zero discipline on your curiosity. Write that down and paste it on your forehead and think about it. What I just said to you should change your day. If it doesn't, read it again until it does. Okay. Question. Redirected me in the boot camp about my story around curiosity. Oh gosh. Yes, koans from Jeff, exactly. What is the sound of the one hand? Curiosity. Could you please elaborate? Oh, I see. You're redirecting David. David. Okay, gotcha. Okay, I thought you were asking me something. Yeah. Okay, cool. Thank you. All right, yes, a koan is a Zen riddle. David, I'm going to teach you a koan. I'm going to teach everybody one. Okay, so now you're going to benefit from my massively inexpensive, thank you, University of California degree in Asian philosophy. I'm going to tell you a story. This is not a koan. This is a parable. It's designed to teach you. It's a story to teach you. Okay? So one day the master is meditating and the student comes up to him and says, Master, I have a problem. This is the student, his name is David. And David says, Master, I have a problem. I would like to ask you about my problem. And the master says, absolutely, David. I'd be happy to discuss your problem with you, but let's do it after the evening meal. It's morning. Let's meditate. Let's do the day's work. Bring me your question after the evening meal. David says, okay, and he goes away, and the monastery has its evening meal, and then what do you do after the evening meal? The first thing you do is the dishes. That's another Zen, that's a koan. And now that we've done the dishes, David comes up to me again, and he says, Sensei, I had that problem this morning I wanted to ask you about, and you asked me to bring it to you after the evening meal. Now that it's after the evening meal, could you please answer the question I have about my problem? And the sensei says, yes, David, I can, but I'm tired. Let's talk about your problem in the morning. And frustrated and angry, David goes away, and the master goes to sleep. And in the morning, David comes up before the morning meal, and he says, Master, my problem? And David, after the morning meal. We'll talk about it after the morning. And so the morning meal goes by, we do the dishes, and then David comes up and says, Master, I'm leaving the monastery. And Master says, why, David? Why are you leaving the monastery? And David says, because, Master, you're refusing to teach me. I've been trying to ask you a question for 2 days, and you won't answer it. And the sensei says, but I already have. What is the moral of the story? Anybody? Put it in the chat. No, it's not about patience. It's not about ask the question. You're all wrong. It's not about make the decision. This is essence of Zen stuff. Wrong. Don't figure it out yourself. There is no question would be Zen, but that's not true in this case. Okay, you all have it wrong. I love this. Nope. He asked the question instead of out. Nope, you're all wrong. Oh, this is so fun. Your mind will be blown. Oh, Mark, you got to come back and hear the answer. The answer is, if your problem managed to wait from yesterday morning to this morning, you have no problem. If your head is underwater, David, you have a problem that you need to solve right now. But if you have a problem that can wait from morning to evening, and then from evening to morning, you have no problem. There is no problem, exactly. That's the answer. Learn to be wrong immediately. Okay, are there any other questions, burning desires, going once about Open 5A, Open 5B, anything about how to do it? It's so simple. Not easy, but it's so simple. Simplest thing I do. You must practice. It's done after the first 5 minutes. After that, you're looking at retracements to inflection points, just like you do with the first hour. The Open 5A is just another key inflection point, and that's true in commodities too. It's not a trade in commodities, but the inflection point is respected in commodities. Just look at oil right here. I mean, as we're talking, look at that right there. It just bounced right off it again. It's done that a couple of times today. I mean, how many examples do I have to show you before you realize this is the sweetest trade in the book? My surfer friend said, God, even I could do that. That's totally bitching, dude. I could do that. That's him talking to me. I mean, literally. God, how hard could that be? You buy there and you just ride it. It's like riding a wave, right? I mean, catch the tube and go down the falls. That's exactly right. Okay? So it's that simple. It's that simple. Okay, the setup is all about the overnight volume and percentage change, but that's really just to gauge the energy. High volume nodes, places to lean on. Look for head fakes because it often gives them to you. Only use market orders in. Trail a stop, use that as a limit to get out. Or use a market order out if you think it's a good idea. You know, go with your intuition on that. You must have a stop in this trade. If you can't get a stop in, you're on the wrong side. That simple. Trade's over after 5 minutes. The rest of it is the B trade, which is an inflection point trade like any other inflection point trade. Questions, comments? The B, yes. And often, Jason, though, the question is, how long do you consider the Open 5B to be tradable? Till the close, but often we bounce off of it from previous days, as you saw that this morning. Today, we bounced right off yesterday's Open 5, and that's very, very common. That's why I keep it on the charts, and that's exactly why my charts look the way they do. You know, this isn't an accident that my charts have only this on them, nothing else, and this works as well as it does. This is not an accident. This is 47 years of progress, not perfection, okay? That's what you're seeing. So that's all you need to know, you know, benefit from the work I've done. That's why I put so much effort into teaching. I don't care about how much money I make anymore. Money's meaningless. It never was meaningful, but you know, as long as I have enough money to put a roof over my head and eat, I'm fine. But if I can teach, you know, 200 of you to be able to do that and make money. And for people, you know, like Maria, it's life-changing. And someone like David, it's life-changing. And, you know, for someone like Joey, it's something to keep them interested at 77. And, you know, that's my mission. That's the passion. So, you know, don't overthink this, guys. Seriously, don't overthink it. Yeah, Amy, that's a key point. And I just started learning to teach it that way, that if you can't get the stop between you and the market, you're wrong. It's that simple. Forget targets, forget the range, just get the hell out of the way. You know, it's better to be wrong 5 times on the head fake and then catch the move, because think about the math. Let's say you're wrong 5 times on the head fake and each time it costs you 4 ticks. Okay, so 5 times 4, right? 20 ticks. Not a problem when you can catch an 8-point move, which is a whole lot more ticks, right? So, you know, it's just a matter of keeping the math in mind. All right, any other questions, comments, burning desires? Lee, would you like to add anything at all? Did you want to answer that footprint question that I deferred?
Yeah, I was thinking about that question, you know, and I will trade the open, but I trade it using a footprint, which is the dome. But to Joey's point, I'm not using a fast footprint. I'm using my 30-minute footprint, which is the whole day at that stage. It's probably worth a live session or a session at some future date, because I call it my LGBT setup. I trade it with some of the same principles as you, but differently. So I think not worth exploring now. Joey's got enough to practice at the moment, both in doing Open 5A and interpreting footprints. We maybe look to do a session on my approach to the open later in the year.
Yeah, I think that's a great idea. I'd like to do that. As Lee and I have both said over and over and over again that either one of us can trade the way the other does. I think that's pretty clear to us. But, you know, obviously we're very different personalities and life situations. So so that would be really helpful. But again, to Joey's question, and if you're going to try to use footprints, I wouldn't do anything but Lee's qualifying footprint approach here, because you're gonna end up looking at something that's a structural event, and it's not going to be significant enough in the first 5 minutes. You're going to be distracted. That's my take. But I really would love to see a session that way, so we could see. And again, that's a very typical, more structural traders approach. Very few people play this open 5 the way that I do, except scalpers. And it's like the holy grail for scalpers is the opening 5. And then if you get a good open 5, often that means you're going to get a good day. Like yesterday was the best scalping in the NQ we've had in months. I mean, it was perfect. All you had to do was watch the ranges, and you couldn't be wrong. So how do I do that? What does that mean? So that's where you want a footprint. Just look at this. Give it a second to repopulate. This is another reason I'm going away from Ninja, because the structure of the bid-ask data is just a joke. What it's doing here is it's recalculating everything it already calculated the last 400 times it painted a bar, and there's no need to have to do that. It's not using any significant CPU. I mean, it's 50%. So this is bad code. This is not my computer or the data or anything else. So I don't know. I'll let it run for a second here and see if it finally populates. If it doesn't, fuck it, we'll do something else. Oh God, Ninja really can piss me off. This is the kind of stuff that I'm angry with them about. There's just no excuse for this. So anyway, yeah. See, it's not even releasing the CPU so I can change windows. That's just really bad code. Anyway, all right. Well, go back and look at the NQ yesterday, guys. It'll be a good education for you. We'll leave it at that. Any other burning desires or questions before we wrap this one up? I don't see any. Okay, well then with that, we will let it go, and we will once again be planning on leaving the world of NinjaTrader. This is just a perfect example. There's no excuse for this. My CPU is running at 30%, and I can't resize a window. Come on. Crappy code. Code should release itself to Windows management all the time. It should not say, I need to do something, and then, Mr. Windows, you can do what you need to do. And that's what's happening here, and that's crap. Okay. Hope you guys enjoyed it. Thank you. I appreciate the comments. I know it was a fire hose, but go back and listen and take to heart the syllabus. Those points I made in the syllabus are all you need to know. Everything else we did was just fun. Yes, and it will be a great recording full of F-bombs and fire hosing, a classic doc. Okay, guys, thank you. Have a great day. Trade well. Stay nimble. We'll see you later. Thank you, Lee.